Okay, MegaWhale team, welcome to another video. Today we're going to be analyzing XRP. I haven't looked at XRP for a very long time, ever since the start of the year actually, the start of last year, 2021, in that recent price surge. But yeah, I haven't looked at it for a long time, so we're going to take a look at it together today and try to figure out where it's heading in the short term and give us some long-term price targets. Now, since I haven't looked at a chart yet, we're going to be going through the whole thing together at the same time, basically walking you through our analysis step by step. So if you've got any questions about anything I do, leave them down below. Remember to like, comment, and subscribe. It'd be great to have you guys around for the future videos. Let's get straight into it. So to start with, we're going to be mapping out our long-term support and resistance lines. But first we need to map in our long-term critical downward resistance, which is going to be this resistance here. This is going to be our long-term resistance, and we've been holding under this resistance ever since 2018. So we've been pushing under, we went bear market. We did try a few times to break up and above, but we didn't really manage to stay above or push any higher, and ultimately led to rejection and back down. More recently, we did have a wick up to the top and again a rejection. So that is our long-term resistance line. Now, if you want a really simple analysis, when we break and close above that resistance, it would be a very good entry. It'd be a safe entry. It would be almost guaranteed to continue upwards at least a little bit. We can see every single time we did break above here, we had a decent move. You know, like 20% maybe, you know, average about 15%, so a decent move, nothing too insane though. XRP is a relatively high cap coin, so it's not gonna explode like 200% in price rapidly like we see on these small caps, but you know, 30% profit is still 30% profit, so that would be looking for an entry point there. Let's chuck in our long-term support line. Now our long-term support line, we're gonna test out a few things. Like I said, I haven't looked at this chart yet. So we're going to input a few support lines. Now this will be our base support line coming down from February 2020, and obviously our more short-term support line would be our support line that we've seen, I would say, around about over here. Now what we're going to do, we're going to bring up our volume profile in a second just to confirm these are in fact our support and resistances, just to see where our large amounts of sell and buy orders are located. But for in essence, this is kind of the pattern we're looking at right now, and we're converging down to the bottom of it. All right, let's bring up our conversion. Let's bring up our visible range. All right, so it looks like we got a lot of sell pressure, a lot of resistance up to about, let's have a look. A lot of resistance, guys, up into about $1.10. And we have a huge gap in the market below about 82 cents, which happens to be this support line over here. So that's confirmed for support, and our next support will be all the way down at 60 cents. And we can map that in now. So we'll chuck our next support down at 60 cents. This will be our critical support. We're not worrying about these short-term minor supports. You know, we do have minor supports down over here at 75, 74 cents. But our critical support would be down at 59.3, so around 60 cents, and vice versa. Looking up over here, we have a pretty strong resistance around $1.10. Perfect. So those are our critical support and resistance. We can get rid of our volume profile now. We're looking at these levels here. Let's actually change these to a different color. All right, so those are our short-term, long-term, short-term critical resistances. We can chuck in our other resistances as well. So higher up resistances, we can have a look and see. We've got our resistance at around $1.40. And we can just confirm, is that a resistance, by coming back to 2018. In fact, that is a resistance, and we did find that as a resistance in 2018. And beyond that point, we don't have a lot of data. So beyond $1.40, we don't really have a lot of data. A very small percentage of the total time, if we look at how long XRP has been ranging, around 2,000 days. We only really had we only had about 60 days above $1.40 US dollars. So we haven't got a lot of data, so we're not going to worry too much about mapping out what you know, where we could go from up there. If we did a Fibonacci retracement to here, to our support, you know, we could easily push, you know, long-term $2.80, $4.20, even $5.50 as a very long-term target. So we'll map those ones in for very long-term targets for XRP. But if you take anything away from today's video, and I think the main thing I want to drive home is the market pattern we're kind of in right now, which is this long-term pennant. You look at a lot of the 2018 coins. Now I know, say, One Chain's one of them. You know, EOS, Verge. I can list a couple. Verge is a great example, and obviously XRP being another great example. Digibyte another great example. We're in this pennant formation, and we're still finding a lot of resistance from that 2018 all-time high. You can see here we've still found that resistance, and we're ranging, and we are coming to the end of a consolidation phase now. So we're coming to the end of this consolidation, and we have to make a directional move. So if we had to make a directional move upwards, we'd be looking at a break of $1.40. All right? So $1.40 is our trigger. $1.40, my bad, $1.10. $1.10 is our trigger line. If we break up past this resistance, we need to close a daily candle above $1.10 and hopefully retest it as support to move upwards. All right. Vice versa, if we're looking at the downside, if we do move downwards and break this resistance, we would only be looking at a sell if we close a daily candle below that 75-cent range and continue downwards. All right, so these are our triggers. At 75 cents and $1.10 are both our bullish and bearish triggers. Where would we go if we went into a full-blown bear market? Well, obviously our first target, our first move would be down to 59 cents. Where would we go from there? It's a little bit harder to tell, but we do have a lot of support down around this range at 36 cents. So I would say 36 cents would be the very, very bearish scenario. And we can map that one out real quickly. If we saw something like this, this will be basically our bear market scenario, and we'd probably get a little bit of consolidation around 59 cents, maybe a little bounce. And obviously our bull market scenario is we push upwards, we retest that, find support, confirm that as a new support resistance flip, and then push past $1.40. And we could go anywhere up to $1.40, $2.80, $4.25, or even $5.60 for in the absolute long term. So looking at XRP now from the market standpoint, looking at their support and resistance zones, would I purchase XRP? You know, like, it's in quite a nice spot if we're looking at risk reward. If we're trading off risk reward or not taking into account the rest of the market, XRP is quite a nice spot. You don't need if you're looking at holding it, you'd want to be selling below, like I said, 75 cents. But if you were to trade it, you could jump in a trade now, set a very tight stop loss underneath this resistance, around 6.4% stop loss, and your first target could be around what? Let's round off to a psychological resistance of $1, so 19.27% upwards. It's a 1-to-3 ratio. So risk reward wise, it is in a good spot for the short term. For the long term, again, it's very, very reliant on what Bitcoin's doing. We did a video on Bitcoin earlier today. If you want to go check that out, I definitely recommend heading over to our previous videos and having a look. And it depends what Bitcoin does. If Bitcoin pushes past this resistance zone, XRP will fly. If it drops down below this resistance zone, XRP will obviously drop down and continue downwards. So guys, with that being said, let's take a look at some of the technicals. We'll move all this off the chart and we'll see what we can find on the technicals. Alright, so we brought up the Ichimoku cloud on the 2-day chart, and what we can see is we can see we are definitely still in a sideways consolidation pattern, and that Ichimoku cloud kind of confirms that with the clouds being overhead, and we're kind of testing And we did break briefly above. If we bring our cursor over, we did break that conversion line, signaling a long signal. And if you did jump in that, you would have been pushed up to the top of that range and about a 20% profit. And we've come back down recently with our sell signal on that breakdown of that conversion line. If we go to a 3-day chart, we can see a similar thing. It's really just confirming that we are pushing sideways. Again, with the 1-day chart, it's confirming that there is a lot of resistance in this zone with this huge red cloud right in front of us, and we do need to break above it. The thing is, if we do break above this cloud, we will most likely continue upwards because we have a huge amount of resistance. If you remember a volume profile that we brought up at the start, we have in this range here, we've got between these two lines, there's a huge amount of sell and buy orders. So we've got a lot of volume in this range, a lot of resistance in this range, and we do need to push up, and we need to clear that and get that momentum on our side again to push up higher. Otherwise, we're either going to consolidate sideways, or we will be heading down if Bitcoin decides to take a tank. Let's move on to something else. Let's try to look at something a little bit optimistic. Let's move to a 3-day chart. Let's bring up the MACD, and let's bring up the 200-day moving average. So one of the traditional mechanical trading strategies is longing every single time you get a positive cross on the moving average, on the MACD while you're above the 200-day moving average. So a positive cross, in essence, is a cross of the MACD while we're above 0%. So at the moment we are negative 5%, and the last time we had that positive cross on the MACD while we're above 0 and above the 200-day moving average was the 3rd of November, and we did see a little bit of a rally over there as well. Break it down to the 1-day chart, we can see a little bit of convergence upwards, but the thing is we are underneath the 200-day moving average, and I say this a lot, but the 200-day moving average is pretty important to remain above, especially if we're in a bull market. We can see this entire move here, we were above the 200-day moving average. This entire move here, above the 200-day moving average. Here, above the 200-day moving average. You don't get strong rallies, even here, above the 200-day moving average, when you're below the 200-day moving average. So our first step, if we want to look at more of a bullish case scenario, or we want to be more bullish again, is to break above that 200-day moving average and close above it, similar to what we saw here. Again, a lot of resistance around that zone. So you get an easy rejection, but you do need to get above, and we haven't had a retest over here, which pushed us up. And remember, with our Ichimoku clouds, this whole range here, a lot of resistance, volume profile indicating a lot of resistance. So to push up to this 200-day moving average is going to require a very significant swing in the entire market. All right, so for XRP to go up here, it's going to require a significant swing upwards in the market. I would say Bitcoin would have to at least touch $50,000 for XRP to be swinging upwards here. Otherwise, we're either consolidating sideways or heading down. Okay guys, I hope you enjoyed the video. Remember, like, comment, and subscribe, and stay tuned for the next one.